Dr. Friday is here. Okay, we'll run through what we are going to present, how to modern financial statement for consulting company. So we'll just run it through it. We have chart of accounts, we have transactions, okay, we have profit and loss account, we have cash flow statement, we have balance sheets. Okay, so anything you do here, it automatically reflects here. If I change this to income, if I change this to income, okay, and we have says here, see, that's shown me income here shows because it's directly reference to income on the chart of account. But this is the sales I change. We change it to income. See it, the amount has come in. When it was sales, just sales now. See it, it shows zero. But immediately I change it to income, comes to amount. Okay, so if I come and I change this income, okay, assuming this accrue, it's okay. This money is on. There's no owing. Or cash. See that your account receivable have reduced. Okay, you're no longer owing us 100,000. That's reduced, right? So if I come and say this consultancy, this stationery, we're not owing a supplier anymore. There's nothing like owing. You remove it. Be under the current liabilities, 20,000. So in all of this, you see the account always balance, the accuracy, checking the net assets and net assets here, always balance. See, so this is a dynamic financial statement. It's so interactive. Anything you do here, if I come and add more sheets, okay, because this is formatted as a table, and I come and add more sheets. Add more sheets. Okay, and remove this. See that amount transactions are added. See that the net profit has increased. Okay, and the cash flow has also increased. Then the net assets has also increased. Okay, so the more I add more information, the more these profit and loss accounts and the cash flow and balance sheet are also updating automatically. So I don't need to do anything. I don't need to reproduce this. I've already formatted, I've already modeled it. So whatever I do under these transactions now, to automatically update. Then this chart of account, if I have a new account I need to create, I come and add it. Once I add it, it will be linked to the transactions sheet. And from there, once I select it, it goes to the profit, cash flow, and the balance sheet. Okay, this is a kind of model where you don't have notes to the account. All the notes to the account are actually linked inside the account. Okay, there are some cases where you have notes to the account to explain all these changes, and from that note to the account, you now link to the profit and loss account, cash flow, and balance sheet. But in this case, it's not shown. The note to the account is not shown. Okay, so you just wait right there, and let's get into actions where you can have the full details of how to link this account from the chart of account to the transaction down to the balance sheet. But this time, we're going to look at how to model your financial statement for a consulting company that doesn't have stock, that doesn't deal with inventory. Okay, all right. So you're expected to have a chart of account, that will show all the account that you keep in the company. That's the start. You need to have chart of accounts. Okay, this is a chart of account and category. All right. So then we can make this chart of account as a table. You highlight it, and go to format as a table. Okay, format as a table. You can decide to remove this filter. All right, then let's check the name of the table. Come and click table design and table. Change it to chart of accounts. So this table now will be a chart of accounts. All right. Then the next thing you need to do is to begin to link into transactions table. And this transaction table shows all the income and expenses. Okay, you have serial dates. All right. Now, the first thing you need to do here is to validate this account type. You click there, click data, click validation. Okay, you click list. Then you come and take the range, click enter. Okay, you can see that we can see all the accounts type here validated. Okay, you can roll it down. All right. Now you can pick one and or want to dynamically link these account categories. Okay, so that once you select the account type, the category will automatically appears. All right, with the help of VLOOKUP, VLOOKUP can do that for us. The lookup value is this, comma, and the table now is a chart of accounts, okay, comma. Then in the index is 2, of course. Take 0, press enter. All right. So if you have this, assuming I don't have anything on this, look at what will appear. See, we have error sign. So to remove this error sign, you come here and add inferior, and comma, with double quotation, press enter. So that anytime you do this, it will show name. All right. So the next thing that you could do is begin to fill the data with value. Okay, assuming we fill with the value now, and also assuming that the account type is being modified. Okay, so show what I intend to achieve. All right, and come and be modified. Right. So you now have, when I select here now, anything I select here, if I select capital investment to turn to equity. Okay, select this now to turn to this. All right, so you can see that we have been able to link the chart of account into the transactions. So you can decide to have the total amount. You click here and click sum. All right, then you highlight, you draw, drag it to the left side so that you now have accrued. This accrued now it become accrued income or accrued expenses, because we have income here, we have expenses here, we have income here, we have expenses here. All right. Now we have to link this to the profit and loss account. Now these transactions will continue to, information will continue to come on these transactions. And as you add more information, you have it under the last transactions you have here. So as you are continuing to having adding more new transactions, it will continue to update to various accounts. All right. So the first thing now you need to do is that if you can check the chart of account, you see that I'm very careful. I make the first 3 the income, the next one expenses. So I also added a space here in case I have more income to add. So what I need to do now, I'll just come here and click, okay, linked it, and just drag down, right? So I can come here, I have total revenue. Okay. Then here I have expense. Then I come, I said equal. I also have expense here. Of course, the PPE, which is an asset, would not be linked to profit and loss account. Okay, I'll start from salary, wage. Drag, click, and drag down. Okay, I see I have it up to the transports. That's the expenses. That's a key we're doing the year. Okay, I can come here and say total expenses. Okay, all right. So now, says, I will use some if function to be able to pick sales. I have only one sales here. If I have up to 3 sales with some if functions, I'll be able to pick out sales and add it here. And under the profit and loss account, what we are looking at both cash revenue and the revenue that our customers are still owing us. So you add the two together. Okay, like these areas where you have revenue owing and the amount cash, you will take 111,000 as our consultancy fee. Okay, so now I'll come and say equals to some if, right? The range I'm looking at is here. Okay, the range is here. Then press comma. The criteria is says comma. The sum range is the amounts. Press enter. Okay. Now the next thing I need to do is to put $ before F, $ between F and 3. Okay, I come here again, $. The essence of $ is to make it absolute reference. Okay, and with the absolute reference, it means that I have locked that range. So if you come and drag it down, you'll be able to replicate every other consultancies and training fee. All right. This says now, if I come, this says I have 889,000. If I come, I change this one to sales. For example, change this one to sales. You see, it has increased. Okay, that has increased. All right. So it's dynamic now. Then I come, I now add sum them together, have total revenue. Now, under the expenses, you do the same. You can just come and copy this and put here. Okay, salary, just drag down. To automatically also get the sales stationery from the list and add it up. All right, so you can come and add this together, right? And minus revenue minus expense, right? So now this is net profits. The next thing we look at the cash flow statements. Okay, you come and bring in the information for the cash flow statement, and you link the net profits. Okay, you can create a space for depreciation, assuming that is depreciation later. All right. Then accounts payable. Account payable, you're looking at where you have a supplier you are still owing. These are the account payable. So let's dynamically link it so that anytime we have information on the account payable, it will automatically comes. So we use the under this category, take double quotation, that anywhere you see expense, anywhere see expenses, to just dynamically recognize it. So account payable, you see that it picks this expense and this, add it together. Okay, so if I change this to account payable, see that it has changed, right? So dynamically changes, right? So accounts receivable. We also use some if. Okay, still come under the category. Then you also look for where we have revenue. Okay, using the double quotation, open and close. Okay, and take this, press enter. So accounts receivable means that customers are owing us, and it's going to impact negatively on our cash. So it's a negative sign. So now you can come and use some to add this so that you now have net cash flow from operating activities. Okay, so we also look for net investing activities so that we can also get net cash flow from investing activity. Now, this assets, PPE, is an asset. So you can come and do some if. So get it is under this account type. Then comma PPE is here, is on the under the account type. So you can use related reference to look for it. Pick the amounts. So now PPE is an outflow, so it's also going to be negative. All right. So since we don't have any other item on investing activity, so we're just going to add the PPE here only as a net cash flow from investing activities. Then we also look for the investments, some if. Okay, investment is under account type. Take post to comma, can find it here. So we take a related reference, then we pick the amounts. All right, so investment is an inflow, so it's going to increase our cash. The investments. Right, so we can now look for net cash flow for the year, which is the same thing as this plus this plus this. Enter. All right, so since we don't have any cash flow carrying forward, we just have to do this. All right, so the next thing now we do is to go to the balance sheet side and also link it. Okay, so we can come and fill it up under the PPE. We can also track it from the transactions so that anytime there's use some if. Okay, PPE is here. For the reference, say the amounts. So you see 50,000 just come up. Anytime you change the amount here, it will automatically reflect here. Then the bank, which is this amount, just link it. Then accounts receivable from the transaction. And so use some this to get it here. All right. So accounts receivable, we're looking at where we have income, customer owing us. So you can use revenue, double quotation, close, then take the accrued, press enter. So you just capture only 100,000, just the way we did for the cash flow. But in this case, this is a balance that we are owing, that customer are owing us. So it will show here on our accounts receivable. So let's add this up. So that I'll have total current assets. Right. Now I have total current assets. The current liability is the account payable. The suppliers we are owing, the balance as at when we are closing accounts. Okay. You can also track it from the transaction, comma. Then check it's an expense. Okay. Then take the account accrue. Press enter. So the 310,000, it was also in balance. We are owing our suppliers. So we can also come and click to have the total for current liabilities. Net current asset now will now be current assets minus current liability. Okay, so now we now have net asset now will now be fixed asset, non-fixed asset plus net current assets. All right. So we now have net current asset. Now, the retained profits is taken from here. All right. Then investments also be taken from the transaction. We have the investment here, comma. You see reference. Right. So you can come and sum this up. All right, check accuracy. You can see that we have 0, meaning that all our processes are correct. So in case you have depreciation, you can come here and create more sheets, month cell depreciation. Okay, assuming you have 5,000. Of course, this depreciation means that these profits, okay, if you do that, you see that this depreciation is now part of the total expenses. Of course, for you to get the cash, you need to remove it. You need to remove that same amount, add it back to net profits so that you now have real cash. This is the real cash. But depreciation does not involve a cash movement, just an accounting record. Okay, so if you do that, you see that your check accuracy is still there's difference there of 5,000. So it means that your PPE under the balance sheet has to reduce. Okay, has to reduce by that depreciation. Okay, so in minus, and just minus from this present. So you see that the accuracies are come to 0. So it means that the net assets are equal. So now that you have modeled this financial statement, you can change anything here and you will just begin to see how your account is balancing. Now, if I come and I change this diesel to maybe 6, see now, everything is changing. If 6 now, they are owing us more of 6, 1 million. See now, your net profit is there, your cash flow is there. Okay, and you see your net asset has also increased. See, so if I change fueling, assume they are owing us fueling 1.5 million. We are owing supplier fueling 1.5. You see, your net assets showing negative. Your net profit showing negative. Your cash flow, although show positive because of capital you have invested. So you can see how there's interactions now between your chart of accounts and transactions, profit and loss account, cash flow, and then the balance sheets. So if this video is able to address your challenges or is useful to you, kindly subscribe to my YouTube channel. Kindly comment so that we can get your input and even improve more on what we have done. Thank you.